Well, hi Bob, and thanks for joining us. As always, a pleasure to speak with you. As you forecast, there were large moves caused by the EU and UK trade talks. The pound-dollar event experienced an almost 200 base point drop due to one of Prime Minister Boris Johnson's comments. Well, the major currencies continue to be dominated by fundamental events instead of macroeconomics.
More of the same in the week ahead. Macroeconomic data will largely be brushed aside. There are some stats that obviously will garner plenty of interest, but not the lion's share of it. The Fed's in action, so expect plenty of influence there. Economic projections, what else is the Fed going to deliver in terms of support with the lack of stimulus package from Capitol Hill? Obviously, progress or lack of in terms of stimulus package will also provide direction. We've seen dollar support, late last week with a lack of progress on Capitol Hill. For the pound, you got Brexit. Obviously, that's a key driver. You got the BOE in action. There's been talk of negative rates. Economy's in dire straits. This furlough scheme, once that falls off, obviously unemployment numbers are going to be far more dire than what we're seeing at present. And for the euro, COVID-19 containment measures are still there. The EMA is not scheduled to review the vaccines until mid-Jan. So that leaves the EU and the Eurozone exposed to further containment measures, obviously from continued rise in COVID-19 cases. So these are the key areas of focus, in the week ahead.
Meanwhile, Bob, what is happening in regards to commodity currencies?
For the commodity currencies, expect influence from, COVID-19 vaccine news, new cases, Capitol Hill. These are going to continue to influence sentiment towards commodity prices and obviously the currencies as well. But there's some economic data that we're going to be looking out for. For the loonie, we've got inflation retail sales figures. For the Aussie dollar, we've got employment numbers. And for the Kiwi dollar, we've got third quarter GDP numbers as well and trade data that will garner plenty of interest. But expect obviously market risk sentiment and the sentiment towards the economic outlook to be key drivers. Obviously the Fed's going to influence that overnight on Wednesday, and then obviously Capitol Hill as well. So these are the key areas of focus for the week ahead for the commodity currencies.
Since we mentioned China there, Bob, what can we say about the Chinese yuan and the Japanese yen?
For the Japanese yen, we got the fourth quarter Tankan survey numbers to look out for at the start of the week. That will draw some interest in terms of what sentiment is and what expectations are for the Japanese economy. We've got trade data midweek. How's the Japanese economy chugging along? Obviously, trade terms have been quite dire for Japan of late due to the COVID-19 pandemic. And then obviously the key area of focus will be the Bank of Japan monetary policy at the end of the week. Will they deliver support? Are they going to continue to stand back? So those are the key areas of focus. For the Chinese yuan, fixed asset investment, industrial production, retail sales, and employment figures. Those are the stats that are due out in the week. Obviously, industrial production, retail sales, unemployment numbers are going to be the main areas of focus. Other than that, obviously any chatter from Capitol Hill on trade terms. Obviously, Biden's talked about retaining that phase one trade agreement. So expect any chatter from there to also be key drivers. And obviously there's that talk of sanctions on those more than a dozen Chinese government officials that are involved in anti-democratic moves against Hong Kong. So plenty of tension there to keep the markets interested on top of everything else that we're looking out for.
Finally, Bob, let's turn our attention to geopolitics. What's happening in regards to the US and just what is going on with Brexit and how do you expect that to end?
On the US political front, well, you've got Capitol Hill and lawmakers that are failing to agree on a stimulus package that, the US is in dire need of. So that's one area. The other area of interest is obviously how Joe Biden's going to take over presidency. He's looking to, rather than reverse, actually maintain some of Donald Trump's moves against the likes of China. That's going to be interesting. He could take a softer stance, yet still be considered quite anti-foreign policy and anti-foreign trade without actually seeming to be the bad guy. So it'll be interesting how that pans out. But obviously the markets are going to need more support, both fiscal and monetary policy, to support that economic recovery. Joe Biden's expecting to deliver that through, the COVID-19 vaccine. Expect plenty of attention on production numbers on the vaccine front. On the Brexit front, obviously there's plenty of updates that are going to be coming out over the weekend from talks. There's a Sunday deadline. Fairly to make progress and narrow the gap on differences, and that's a no-deal Brexit. That would sink the pound to sort of sub-120s. And then you could start beginning to hear the talk of parity against the dollar, which has never happened in the history. Those are the two areas of focus. And then obviously you're going to be looking at COVID-19 and stuff like that as well. But Brexit and US politics are the main areas for the week.
Fantastic stuff. Thank you very much, Bob. Always a pleasure to speak with you. Take care of yourself, and we'll speak to you again very soon indeed. Thank you everyone for watching. This was The Week Ahead. Don't forget to head over to all of our Dukascopy TV social media platforms to keep up to date with everything else affecting the markets. Until next time, goodbye.